Hi everyone, welcome back to Be Rich Podcast. It's me and Dhana. Wishing you a happy Sunday morning and having a wonderful weekend, I hope. Or at least we pray. Yeah. It was an interesting week to say the least, with the whole Adani fiasco starting the trading day off because Monday was a holiday. No, not Monday. Wednesday was a holiday, right? Wednesday was a holiday. So we had a 2-day where the FIs were selling. Then we had a break because the Maharashtrians were getting their house in order, but they're busy voting to decide who should be ruling their state. Hopefully that's come to some kind of a conclusion. Then, of course, the fiasco of the Adani happened, which I'm sure you've seen many videos and read many news clips about, and has gone many rounds on. So I don't think I need to beat that Adani horse anymore. Do we? Do we need to beat that Adani? I don't think we need to beat that Adani anymore. I'm sure the public opinion, the court of public opinion has already been made. Each faction has taken its side, and I'm sure they're all holding their ground while Mr. Adani figures it all out. We wish him the best of luck. And the shareholders and investors of Adani Group companies, we wish you also the best. Unfortunately, me and Dhana are not rich enough to afford any of the Adani stocks. Yeah. They're nowhere near our tiffin coffee ranges. Maybe our holiday, maybe a kidney liver range. Probably then we can look at Adani stocks.
No, sir. If at level also, I have many of the stocks, sir. I need to complete that, and then if the...
Spoken well and spoken true. Right.
Yes.
Anyway, getting back to the point where we were, and that company is doing great now because in terms of pricing in the market, it seems heavily discounted, what we've been talking about for the last few weeks. And if you're not motivated over the last few weeks of Dhana's videos and him deep diving into Dr. Reddy, just on the sheer price of where Dr. Reddy is, you must be drooling, to say the least. You must wipe your mouth when you see something served up like this, like the plate of biryani, whatever your type of biryani which you like. It will be Madrasi, Hyderabadi, right. So it's like a big plate of hot Hyderabadi biryani made fresh and ready to be eaten. So we'll figure it out. The price where Reddy is sitting, it is looking like a nice hot biryani plate ready to be served to you. Those of you who have been waiting for some time since Dr. Reddy was 6,000 and the split happened and thinking, should I consider and all that, I would say this is a fabulous point to consider. Yeah. Will Dr. Reddy from here go to 1,000? Possible. Will it go to even 800?
Possible.
Very much possible. But if you see where Dr. Reddy is corrected over the last 1 year, right? Now let us, just before we get into your research, if you look at Dr. Reddy, if you bought Dr. Reddy 1 year ago, you're up 5%. Oh. That's how much is corrected. Meanwhile, you take any other stock, even your other favorite, Mr. Natco. Natco over 1 year is still up
76%.
Profit. If you entered Natco a year ago, you're up
76%.
Yeah. So Dr. Reddy is corrected quite tremendously for a year. So I don't see how much more tank of correction is there in Dr. Reddy. Maybe it'll come down to 1,000. Maybe, I don't know. But it's corrected quite a bit and it's nice.
Every dip is a chance.
Yes, it is a fabulous chance. And even on days when the market is doing a dead cat bounce, for some strange reason, they're still letting you buy Reddy at a discount. So consider. Please consider. I can only say consider. 6 months from now, a year from now, when Dr. Reddy is 2,500, please don't message Dhana and me saying, sir, can we buy Dr. Reddy, sir? What do you think about Dr. Reddy, sir? I'll be like, yes, it is, my brother says, diamond needle.
Simply word.
Yes. It is right now rust needle. It'll turn into steel. Then slowly we'll put Fevicol on it and roll some diamonds upon it. And then it'll be out.
Silver to gold to...
Yeah. Anyway, I'm sure the audience is exhausted with my monologue. They would love to hear what you have prepared for us. We'll dive into that and then we will talk further about Dr. Reddy.
You give two homeworks, sir. One was the cycling part you need to find out, and then the second one was earnings call report. First we can discuss about the cycle part report.
Yes.
So that we are discussing about the cycling part. Natco, we have the 3 years of good period and bad period that we have already discussed. But in the 2019 to 2014, 15 years I have been taken. For the 5 years of each cycle, 3 years gap. So like that I have been taken. So that report I can read out, and then they can finalize what was the cycling period will be there. So the cycling period of 2009 to 2011, the share price was around 93. After the split, now the Dr. Reddy share was around 6,000 past year we all see. Now it was splitted. Now the 1,000 rupees. Just we consider as a 1,000 rupees as 2009. What will be the price?
Okay, so you're saying you're taking today's price and the face value of today.
Today.
So that's why you're taking a ratio of what the price would have been in 2009. Very good. So 2009 to
2011, 3 years.
Okay, 3-year period from 2009 to 2011. Taking the current Dr. Reddy's face value and share price, you're taking the ratio and saying what would it have been?
238% growth, sir, in the share price. 93 rupees to 315 rupees it was moved. So the comments, it was a good performance from the 5 cycles of analyzing. So why the good performance was happened was the company was significant growth and benefiting the strong international revenue, especially in the US market, and successfully launches the new products and increased the demand for the generic drugs and contributed the performance. So this was the good period. Now the 2012 to 2014, this 3 years of cycle.
So first we looked from 2009 to 2012. 11-12. And there we saw almost whatever you capitally put in grew by 3 times. Now we're looking from 2012
to 2014.
Okay, which is the next slot.
Yes, sir. Here the price was 320 at the beginning, 650 at the end. So
okay, doubled.
105, 103%.
First time it went up 3 times, now it's doubled. Okay.
So this is also a good performance. Dr. Reddy continued the benefit from the global market presence, and especially they are increased in the emerging markets like India, like that markets they are entering, and the company expanded its portfolio. So the first part will be the good performance, and second part was expanded the portfolio of the diversification and increased sales from the key drugs such as the oncology that we discussed. So these are helped growth. So it was in the 2012 to 2014 period.
Very good.
Now the bad performance period, 2015 to 2017.
Okay, that's the next 3 years.
Yes, sir. At the beginning 650, at the end 445 the share price.
So it slid down.
26% minus negative.
Okay.
So this comment was bad performance. So why? The decline at the stock price was due to the regulatory challenges in the US market. FDA's scrutiny was also happened, pricing pressures on the generic drugs and increased competition. So these all are considered as a bad things on the comments. This period also saw lower than the expectation of financial growth and profitability. So
okay, great. So this we saw a decline in capital. That was mainly due to the headwinds facing in US and pressure from other competition in the market, which led to this. Right.
So the margin price will be comparatively less to the company, so they are struggling. And the 2018 to 2020, this period 500 was at the beginning of the share price, and at the end of the time 1,000 rupees.
Wow, almost doubled again.
Doubled.
Okay.
Now the good performance time. So the strong recovery was happened. New product launches also happened. Particularly in the US market, they are continuously focusing on that, and the regulatory approvals that are waited in that bad period, that was also approved. So they are recovered from that setbacks. So this was the 2018 to 2020 performance.
Very good. Now 2020 to
2021 to 2023, that 3 years of performance, sir. 920 at the share price at the beginning, at the end 1,150. So 25% up, sir. So slightly moderate performance. Then we are comparing to the second cycle.
But it wasn't as great as the other segments you're looking at. So I would say we are in a bit of a lull period.
Right. Lull period.
Okay.
So why this was happened? The same thing, sir. The company showed the steady growth, but the economic challenges like supply chain and disruptions in the competitive prices. So, and the competitive pressure is also there, and the pipeline structure also something in the negative part. And the consistent sales in the emerging market will be the impact will come into the 2024 market. So, there are comments on that. So, in the 2024, if you are taking the 11 months of time, 3% also the share price was up. But it was the moderate performance. The slower growth comparatively to the 11 months that we are comparing to the good part, the 2011 to 2012, and 2012 to 2014, it was comparatively low now. So I think it will be rebounds in 2026 by the analysis I have been made.
Yeah. See, the problem, I'll tell you what. This analysis is looking back.
Looking back.
And that road is always very clear because it's the past. We clearly know what happened. The problem is, how is that going to help us seeing forward? It only helps us in one way. it tells us the company is resilient. Right? First of all, the first segment which you looked at, that is when the pharma sector in India exploded and entered the global market. That is when it went from 93 to 300, right? But you saw 3 times capital appreciation. That was across all pharma companies in India, because that's a time when the Indian pharma sector was looked as potential. It was the boom. It was the beginning of the boom. Because the generic drugs demand worldwide went up, and the Indian pharma sector was primed to capture that and take advantage of that. So we entered that, and that was so you can actually need to discount that whole period.
Okay, sir.
Right.
I think it was 6 years of period, sir.
Yes, so that period is not going to repeat. Because that kind of dam burst is not going to happen. Because now pharmaceutical companies are there worldwide. Generic pharmaceuticals are made everywhere. And right, so each one is competing against each other. This empty market, and virgin market is not going to be there for these guys to enter and try to dominate. Right? So that kind of a position is not going to be. That's an anomaly. So if you look at the rest of it, having consistent growth has been good. Right? Anywhere we were compounding in an average of above 12 to 15% year on year is great. Right? For a value investor, that is what we look at. Yes, there has been some negative years, but by and large, most of it has been positive, and the company has been resilient through it. Now, from here, what is the what we can take out of this is the company right now, from here on, we have to see. And like you said, the company's major market is US. And that's where the problem is. I think one of the main reasons why this company is being squeezed right now, because they're worried about the earnings for Dr. Reddy, especially when the major market for them is US. And with Trump coming into power, right, his ideas and his cabinet looks really different from what we are used to. So it is going to be very different for Dr. Reddy in this environment. If Dr. Reddy, how easy it will be able to sell drugs and do business in the US. But we have 2 advantages. Dr. Reddy, like last time when you spoke, is aggressively looking at expanding into other countries, South America, Brazil, Mexico, Europe. Right? They're trying to expand into these countries. They're trying to grow. They're trying to reduce their dependence on US. And another important thing, like you pointed out, it's cyclical. Trump is going to be in power for
4 years.
4 years. Right? And his cabinet, the way you saw last time around, right, was shuffled all the time. Whoever was the minister for something was there for 6 months to a year, then they get into some problem and another guy comes. If you see, there's a lot of shuffling happening. So we'll have to wait and watch. The policies are not very clear with him, and it's very up and down. Right? I understand there are a lot of people who watch us support him. There are a lot of people who watch us who don't like him. We are neutral about this, right? Me and Dhana don't have an opinion. We don't have any skin in the game. We're not Americans. We're not sitting in the US. We are purely looking at value investing and the prospect of where to invest and how to invest. So considering the fact how long Dr. Reddy has been there for, the kind of portfolio of drugs they have, yes, the market might be hurting Dr. Reddy because of earning prospects in the following year or 2 years, that it may not be able to earn as much as it was earning, right? I don't think there's any major litigation on them. So that is the research which I want you to do. Find out if there's any court cases, big court cases they're fighting, or is there any threat of big court cases. If those 2 contingents are not there, then the only thing they're worried about, market is worried about, is their earnings potential, especially in the US.
Yes, sir. In 2021, the litigations was happened, so that we are made past video, sir.
Yeah, past video. But that's over, right?
Yes, sir. Litigation was over.
Yeah. So find out if there's anything pending.
Okay, sir.
Okay, then we'll see that. What is the other half which you have?
Earnings call report.
Yes, earnings call report. This is more relevant. The history of what's been earnings and capital growth is fantastic. It shows you the company is resilient, and it shows you that it's been growing, right? Compounding. Yeah. So now let us talk about the current earnings crop. What was the earnings call?
So the earnings call, many of the questions has been asked. So I will look at the aspect of future and history and expansion strategies and challenges they have been facing.
Very good.
So now the future prospects. So they are planning to launch the biosimilars like rituximab. So that was a drug. Europe by February 2025 they are planning, and US by financial year 2026. So the development of GLP-1 drugs. So it was like same like the semaglutide. So the semaglutide was a sugar-based drug, I think, sir. So when they were searching. So they are improved the strategy on that, and the strategic collaboration with the G-led for Lenaka Paver and Nestle joint venture for the nutraceutical products. So these are the future prospects. So they are mainly focusing on the expansion in the Europe, North America, and emerging markets, notably Russia and India. Heavily, and the R&D investment is the main part, sir. From the Q2 revenue, 9.1% they are going to input in the R&D investment. So they are looking for the new drugs, I think. So now the expansion part. Acquisition of nicotinil brand and phased the market rollout starting from the April 2025 to 26 in the UK. Nicotinil means it was nutrical product, I think. So it was a nutraceutical product. So they are focusing on the peptides and biosimilars and high value generics in the expansion. So now the challenges part, the marginal price erosion due to the generics market competition. So many of the competitions are there. So they are having the marginal pressure in the prices. And 92 crore impairment loss for the portfolio product like mine, MAYNE. So that portfolio was 92 crore was impairment loss, and increased the SG&A cost driven by the new business acquisition and delay in the US market. High value product approvals was also delaying. So these are all the challenges. So these all are the questions that have been appeared in the earnings call, sir.
Okay, I was just flipping through the news to see what was the main reason why Dr. Reddy, if there's any news on Reddy for today's price movement, because initially when the market opened, it fell down by 3%. Then it recovered around 1.5% today. So main reason it seems to be is the US FDA has sent some observations, 7 observations to them about their facilities, manufacturing facilities. And 4-5 days ago, there have been the FDC has also recalled some products in the US for manufacturing issues. But these are all temporal, right? So as things stand, I have not seen anything to worry about in Dr. Reddy. The main reason why the price is down is because the net profit has dropped by almost 10%. And that is the main reason why it is being hammered. So that makes sense what you're saying in the report, what you also read. So putting it together, both of them, this is a temporary setback for the company. And these things are very normal when you're doing business. Sometimes business is good, sometimes business is not so good. Yeah, it is bad, but doesn't mean the end of the world as long as you have resilience in the terms of, I don't think, how much debt do they have, we need to figure out. So do 2 things for next week. Go through the history of Dr. Reddy, see how they've been managing debt, right? Go through and see their balance sheet over 3-4 years, the amount of debt they've been holding on to. One is long-term debt. The other is short-term debt. Short-term debt, I don't worry about much. That is those mostly business working capital, trade receivables and all that. But this long-term debt, see how much they have and how much they've brought it down or raised it up, and Google and see where they've been borrowing. Right? And come back with that report. Let's see how much debt they have. But other than that, a company like this should not have any problem is what I feel. We'll study that a little bit and see. But like I said, thanks to the market reacting the way it's reacting on the short-term earnings and the FII selling and exiting certain both companies, they feel Reddy will not go anywhere in the foreseeable future, or whatever reason it is. They seem to be discounting it. But the funny thing is, only Reddy and Natco are being discounted this heavily in the pharma sector. If you see all of the pharma companies, I think if you see, what are the big pharma do we know?
I only know Cipla, Sun Pharma.
See, there, only know. See, Divi's Lab, Cipla over a year, it's up 16%.
16%.
Yeah, it's corrected recently. It's come down by almost 11%. But still, it's expensive. It's at 26. What are the other ones? It's Sun Pharma, right?
Sun Pharma.
Over a year, it's still up almost 50%. Right? Though that is also corrected by, I would say, almost 8%. It's still up. Yeah, and that there are a PE of 38. Yeah. Now look at this. Another one is Divi's Lab. That is phenomenally up. That's up 60%, right? And it's hardly corrected to speak of anything. It was at 6,100 and it's come down to 6,000. And look at the PE ratio where that is.
86. Wow.
Yeah. Right. So. And another famous one is Lupin. Lupin is another favorite, market favorite, and that is at 35. So all of them, and an average is 28, 35, and even 86. And you look at Reddy is sitting pretty at 18. And of course, our all-time favorite Natco is there. Yeah, Natco is sitting at 12.
Wow.
Right. So if you're looking at value, that's tremendous value. But the thing is, you have to have faith. You have to have belief. And I'm hoping, Dhana, that you reading about Dr. Reddy, knowing about them, and understanding all this, that this faith inside you will keep growing. That the viewers who are watching you go through this journey, who are also reading about this, will also start believing in the information. But what I want them to do is not listen to you and take your information and say, I listen to Dhana and doing it. I would like them also to read. Like how you're reading the balance sheet, how you're reading the articles and the call report. I wish they would also hopefully be reading and not just watching and saying, okay, now it must be true because Dhana said it. That would not be good. No.
You can apply the same format to the Natco Pharma example,
Yes.
for the example.
Yes.
So that research will be give you a faith. So this research was giving me the faith to enter into the Dr. Reddy because of the history I have been read out. So all the information I have been researching, so it gained some knowledge to my mind. So I believe in the confident.
Correct. And the reason why you should do this is the time when the market is expensive that you can take the time to do research in all your favorite companies. When the market corrects, right, when it goes to 21,000, we're reaching bear market, then all these companies you have done research about already, you are very confident about them and they come into prices for you to enter. At that point of time, for you to consider, you will be a no-brainer because you have done all the hard work. But if we don't do the hard work and then we reach this bear market, sometimes bear markets don't last very long, my friend. It can just last a few months, at
years?
most, not even it doesn't go on for a few years, at most a year or less than a year before, it switches back on to another bull run. If you've seen many graphs, you can Google and see, and they'll show you bear market compared to bull market. Bull markets are much longer and they go on forever, feels like that, while bear markets are severe and they're much shorter. So when that opportunity comes, you will be ready. You won't be sitting and waiting for me and Dhana to give you some patas list. You will already have your own list of companies which you're confident about, which you can look at. So that's the whole point of this effort and this exercise. Anyway, next week when Dhana comes back with Dr. Reddy, we'll look into the debt of Dr. Reddy, the history of their debt, and see if there's any concern there and anything to worry about.
Okay.
Right? Chalo. Thanks for watching this podcast. I hope you have a wonderful weekend. Do enjoy your Saturday evening. Me and Dhana will be back here tomorrow on Sunday morning early to help you recover from your revelries of last night and probably have something to talk about regarding stocks, shares, and maybe the week ahead to see where we're going.
Yes.
Thank you.
Thank you.